Welcome to Bloomberg Markets. I'm Scarlett Fu. We're at midday right now on this Wednesday. I want to get a quick check of where things stand in the financial markets. The S&P 500 is higher. It's on track for its 56th record close of 2024. The Mag 7 names are leading the gains, and tech overall is getting a lift here from Salesforce and Marvell on the back of their latest earnings. Yields are moving lower across the curve, and that has happened over the last couple of hours here as Jay Powell gets ready to speak at about 1:40 p.m. Eastern time, and of course we will take you there when it happens. The euro was drifting before moving slightly higher. Analysts are increasingly predicting the euro will fall to parity versus the dollar in the coming months. France's National Assembly, of course, due to hold two no-confidence votes on Michel Barnier's government. They're running a bit behind schedule, so the votes have not yet begun, but we are, of course, monitoring those developments. But let's go back to equities for a moment here and check in with Abigail Doolittle, who's taking a look at some individual companies. Abigail?
Indeed, Scarlett. Let's start off with the retailers. A bit of a mixed bag as this holiday season is getting underway. Amazon, you can see, up a very healthy 2.3%. Dollar Tree stores up 1.4%. They put up a comp for the quarter that was of 1.8%. Both Dollar Tree and Family Dollar doing quite well. A bit of a relief after a tough year into this report, down about 49% on the year. Chewy, though, off of its lows, at the lows, down closer to 10% right now, down 4.8%. And they boosted, but the EBITDA guide is seen as being a little bit light. And then Foot Locker, this had been a major laggard earlier, down close to 20%, now down 7.9%. Their guide for the full year 2025, they basically brought down the comp to closer to the lower level below this street. And they're talking about a weaker holiday season. I was out shopping myself last night, and there weren't a lot of people out there confirming what they're seeing at Foot Locker, at least in this one small part of the world. Turning to a big winner, though, on the day, let's take a look at the shares of Salesforce, trading at a record high on the day. They beat, and their guide is looking good. AI demand really helping. Analysts saying that across the board, all the different metrics, Salesforce.com putting up a great quarter. And then finally, turning to the semiconductor space, which overall over the last 6 months has been under pressure in a corrective area. Today, though, you can see gangbusters. Marvell Technology in particular up 22%, the best day since May of 2023. They beat. Their guide is looking good. AI demand there, Scarlett, taking a number of these other chip players along for the ride.
All right, Abigail, thank you so much for that recap. We want to go back to one of our top stories, which is an active manhunt is underway after a longtime executive of health insurer UnitedHealth Group was fatally shot in Midtown Manhattan early this morning. An NYPD press conference just wrapped up in New York City. We learned, of course, that Brian Thompson, age 50, was shot in the chest before 7 a.m. outside the New York Hilton Midtown, where the company was hosting an investor day. Bloomberg's New York bureau chief Katya Porzakansky now here with us for more. So what did we learn from this NYPD press conference?
So we got more confirmation that this seems to be a targeted attack. The suspect was waiting for Brian outside of the hotel. There's been some speculation as to whether the suspect used a silencer, but that's not confirmed by the NYPD at this point. The individual then ran away. They also said that he shot him in the back. Actually, maybe it went through the chest, but it was they clarified that point.
Okay.
And the leg. The individual then ran away and hopped onto a city bike and then fled by city bike. There is a GPS on the city bike, so they are obviously, I mean, the NYPD is like an army, and they will find this individual. But
they will track him.
But and there is also a $10,000 reward for anybody with information. They've also released some photos of the suspect. He did have a backpack and a mask on. And when he fled, it seems like he may have dropped a cell phone, or there was a cell phone that has been recovered, but the police still haven't released too many details about that.
What do we know about the victim, Brian Thompson? We mentioned that he's a longtime executive. He was CEO of UnitedHealth Group's UnitedHealthcare, which I believe is the insurance business.
Yes, that's right. And I believe he's been at the firm a long time. My colleagues on the healthcare team are tracking that closely and pulling up some information on him. I think what is interesting, and we've been noting today, is he did not have security. There was no security detail provided, or at least it doesn't seem there was any security detail provided. Other companies do provide their CEOs with security detail, and so the police did say that it doesn't seem he seemed to have been walking alone and didn't have any sort of protection, and may have been coming to the hotel early to work on his presentation or set up for the investor day. I believe he may have been the first speaker slated for the event. But
okay, so talk a little bit about that investor day. I mean, most of our audience knows that that's when the company kind of gives an outlook to investors and analysts about their business. Did this actually happen?
So it seems it started. We're still firming all this up, but. The investor day, which was supposed to be for Wall Street analysts, for investors, shareholders, and where they give their outlook for the company, and you can actually pull it up on the website. They have all their documents already up there of what they were going to say, he was shot before 7 a.m., but it wasn't until after 9 that the attendees were told that the conference was going to come to a close by the CEO of United, who went up there and said there was a serious situation with an employee, and they closed it. And then it took a while before we even heard from the company. So that's I think it was probably a confusing moment for those inside, but it doesn't seem like they were very aware of what happened. Some attendees seem to have read it on Bloomberg.
Okay, I just want to make sure that we also include the statement on Brian Thompson's passing from the company itself. They've posted a statement saying, "We're deeply saddened and shocked at the passing of our dear friend and colleague Brian Thompson, the CEO of UnitedHealthcare. They're working closely with the New York Police Department and ask for your patience and understanding during this difficult time. Our hearts go out to Brian's family and all those who are close to him." I guess this raises the question. You mentioned that he didn't have any security with him. Investor Day is usually not a controversial period for any executives who are presenting there. I mean, this isn't a safety issue typically, right?
I guess it depends on the executive, and for some executives, I believe they just have security that goes with them. At major companies, and presumably there are a lot of executives out there that have safety threats or something that they deal with on a constant basis. Perhaps he didn't have that.
Yeah.
It is spurring tons of conspiracy and speculation as to what was the motive behind this. Was it personal, or was it did it have to do with an angry customer or something like that? But the conspiracy theories are flying, and I think that the NYPD are digging into who the perpetrator was and what the motive was, and we will. As soon as that's known, we will report it.
Absolutely. And you could get the extent of those questions at the NYPD press conference, where reporters were asking, do you have any track record of perhaps any interaction Brian Thompson might have had with others? Katya, really appreciate your joining us, hopping on to the desk and telling us what we know right now.
Thank you.
Katya Porzakhansky is New York's bureau chief here at Bloomberg News. We want to turn back to the other breaking news story that is taking place across the pond in France. It is a vote of no confidence that will soon be underway that could dissolve the government. Let's bring in now Bloomberg's Caroline Conan, who is live in Paris in front of the French National Assembly. Caroline, where are we at? Because my understanding was that debate on the no confidence motions, because there are two of them, started late. And so as a result, we're not quite sure whether we're going to get an answer immediately or maybe in an hour or two.
That's right. We're about halfway through the debate on the first motion of no confidence against the Prime Minister Michel Barnier. So we've already heard from the far left head, Éric Coquerel, who's the one proposing this motion of no confidence. He's saying that the Barnier government will fail with dishonor. And then we heard from Marine Le Pen, the head of the National Rally, the far-right party, who is saying that this is the end of this very ephemeral government. And in fact, if he does fall tonight, the government government of Michel Barnier will have been the shortest lived of the Fifth Republic since 1958. We'll hear probably from the Prime Minister Michel Barnier in about 1 hour's time. He's going to defend himself, obviously, and defend this social security part of the budget that he was trying to pass before this vote. And then we'll get the vote probably in the next couple of hours. And the likelihood of this Prime Minister's collapse is pretty high, given the far right and the left wing have already said that they will join forces and support this vote of no confidence.
All right, Caroline Conan is live in front of the French National Assembly in Paris. We're going to check in again with you later on this hour as events unfold. Things are taking a little bit longer than anticipated there in Paris as the debate continues before the no confidence votes begins. We're going to dig deeper here into this political turmoil now and bring in Matthias Matthijs. He is Senior Fellow for Europe at the Council on Foreign Relations. He is also the Dean Acheson Associate Professor of International Political Economy at Johns Hopkins University School of Advanced International Studies. Matthias, thank you so much for joining us. You know, what's interesting here, as Caroline gave us the latest update on Michel Barnier and, of course, the extreme left and extreme right, far left, far right, who are kind of teaming up in opposing Barnier. Where is Emmanuel Macron in all of this? He was not even in the country as of yesterday, and arguably it was his decision to call snap elections this summer that caused this latest round of turmoil.
Yeah, Macron faces a difficult balancing act in this. He wants to kind of be the president above the political fray that, you know, will bring stability if this government falls. And I guess we'll have to appoint a new prime minister. But you're absolutely right. He's the one who called the snap elections in June on the night of the European elections, where his party performed abysmally. And, you know, he's also the one who chosen Michel Barnier, who's been a commissioner for the European Commission twice, who's been a government minister 4 times, who was, of course, the lead negotiator for Europe on Brexit. And the Barnier method, right, was supposedly that Michel Barnier could get warring parties together and could pass this budget. This looks like it won't happen now. So for Macron, this is another major headache, especially as he is preparing to host incoming President Donald Trump this weekend for the reopening of the Notre-Dame de Paris, the cathedral that was completely reconstructed over the last 5 years.
Yeah, in many ways, the timing could not be worse. So my question to you, Matthias, is how unusual is it for France's far right and far left to be on the same side, and in this case, opposing Barnier? Do they actually agree on anything else? Could they perhaps join forces and find common ground on other issues, such as policy, for instance?
Yeah, that's what's harder, right? I mean, and it's also a bit of a Rubicon that's being crossed. I mean, in general, the left hates the far right. They don't want to be seen as cooperating, but on this occasion, they've decided that what they agree on is for this government to fall, right, and for Barnier to go. There's many things they hate about this budget. Neither parties, neither the left nor the right hate, like the austerity that it imposes. I think they could make common cause among some of the increases in taxes on the rich, but these are already part of this budget. What they really were opposed to was things like, you know, delays in indexation of pensioners, right, which would wait another 6 months or so. What they also opposed was like the cuts to electricity tax, new electricity taxes, which Barnier had also conceded on. Mm-hmm. It's hard to imagine them actually govern together and agree on anything, but I think both have decided that a kind of, you know, rollover of the 2024 budget is more palatable than being seen to kind of tacitly support the budget of Michel Barnier going through this time.
So then shutting down the government, or I should say getting rid of the existing government, what happens next? You don't have a government in place. There is no budget set. Emmanuel Macron is making his way back to France, and I guess he could appoint a new prime minister, but that may not happen right away. How does France move forward?
That's a very good question. So given the French institutions in place, there is usually, it's fairly easy for even the president to use emergency powers, or any outgoing Barnier government that will go into caretaker capacity if indeed he does lose the vote of no confidence, which I think is now should be our expectation. he can still pass laws that then would roll over the existing budget. So there's no sort of U.S.-style shutdown, government shutdown like would happen in Washington, D.C. But you are right. Macron will want to move quick. He will want to appoint a new prime minister. And then he has multiple options, right? Will he now go to the left? I mean, after all, with Michel Barnier, he chose a man of the right, not the far right, but the center right, somebody who had very strong views on immigration that were, that coincided to some extent with Marine Le Pen's views. Will he now choose somebody that's more palatable to the left, a left-wing prime minister, but then he may alienate some of the more center-right of his own faction, right? So it's not that obvious. So I'm starting to think more and more a technical government, a government of technocrats that is purely there to manage affairs and that can govern until June, July next year. And that's the time when new elections can take place. And so that's what Macron is facing now. What is he going to do? Is he going to appoint a prime minister that's more close to the left and can be supported by the left and even govern with them? Or will he go for a technical government that can sort of do very minimal things that at least maybe not all parties agree on, but they will not put subject to another vote of no confidence?
Yeah, so I mean, that would create a political leadership vacuum in not just France, but we also see that in Germany, Olaf Scholz's coalition imploding. So it's not clear who would be leading Europe, especially as Donald Trump gets ready to take office here in the U.S. in a couple of weeks, and creates some extra tension there between continent and the European continent and the U.S. Matthias Matthijs, thank you so much. He is a senior fellow for Europe at the Council on Foreign Relations. And just to keep you up to date on everything, if you want to follow the latest developments out of Paris, be sure to check out the T-Live blog on the Bloomberg terminal. Just type TLIV GO on your terminal. Now, coming up, Fed Chair Jay Powell is set to speak in just under 2 hours. We're going to discuss what investors might be able to expect from him. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. There was a boatload of economic data this morning, and the Federal Reserve releases its Beige Book later today. Yet, the most important event on today's calendar, Fed Chair Jay Powell's remarks. The central banker is set to speak in under 2 hours at the New York Times Deal Book Summit in New York City. Joining us now with more is Bloomberg's Mike McKee. And let me guess, he's going to say we're data dependent.
I think you win a prize. It's not going to be terribly illuminating because we are still waiting to get the jobs report on Friday, the CPI report next week, retail sales next week, all this ahead of the next Fed meeting. And so a Fed that wants to see all the data hasn't got it in hand yet. So he's going to dodge any questions about December. He may go as far as some of the other members of the Fed who have talked lately about every meeting being live, but will make decisions as they come along.
And of course, you did speak with a Fed official this morning, Musalem, the St. Louis Fed President Alberto Musalem. And what did you learn from him that kind of at least sets up our expectations for what we might want to hear from Jay Powell?
Well, it was interesting. If I were doing the interview at the New York Times Deal Book, I'd be asking him a follow-on to Musalem's remarks today, because he suggested that he thinks we're very close to a pause. And one of the reasons is that the economy is moving very quickly, still growing fast, that inflation seems to have, up to this point, stalled out somewhere above 2%, maybe 2.5%. And so therefore, maybe they need to keep the pressure on. Maybe they need to keep the foot on the brake a little longer. Now, he didn't say that means no cut in December. We still need to bring the Fed funds rate down, he said. But when we do it is an open question, and he wants to see especially the CPI data next week. Okay, so in no rush is kind of the theme there.
We had a lot of economic data, as I mentioned this morning, and of course it's all a drumbeat to the big one on Friday. But what's the big takeaway from today's round of data?
Well, it's kind of funny because Alberto Musalem talking about the economy is growing quickly and maybe we take a break. The ISM services number says cut. So it's hard to know. But basically what you ended up with is a a service economy that is growing, but at a slightly, or maybe even more than slightly slower pace.
Okay.
The headline number went down to 52.1 from 56. All of the sub-indexes went down, including new orders and production. The outlooks are down, still positive, not in contraction territory, but definitely showing a slowing in the economy. The only one that really didn't move was prices. So you've got a mixed message there. We're still seeing price pressures, still seeing some problems for inflation, but the overall economy is slowing down.
Okay, so that sounds like there's need for more data. So that we can...
We are data dependent.
Yeah, read into it some more. All right, Mike McKee, as always, thank you so much. Bloomberg's international economics and policy correspondent, Michael McKee. Coming up, we're going to take a look at the current situation in South Korea, show you how some ETFs tied to that country are trading. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. We're monitoring the political turmoil in France as well as the fallout from the events in South Korea when President Yoon Suk-yeol stunned his country and the world by declaring martial law yesterday. Protests erupted in Seoul while opposition lawmakers quickly voted to reverse that order. The president's cabinet lifted the martial law order about 6 hours later. South Korea's opposition now ramping up the heat on the president with an impeachment motion. And that's the backdrop for our ETF report. We're watching iShares MSCI South Korea ETF. As you can see, it took a big dive yesterday, is recovering a bit today. As for what's next, we want to bring in Clarissa Bettino, who covers Korea for Bloomberg News. Clarissa, I guess the question now here is that the opposition parties have submitted this impeachment motion. Will it go through? Does it have enough support from the rest of their legislature?
Hi, Scarlett. So, that's an interesting question because there are 300 seats in the parliament, and the opposition would need 200 votes to pass the impeachment bill. And what is interesting, what an interesting development that has come out a few hours ago was that the ruling People Power Party, which had voted together with the opposition to reject President Yoon's martial law, has now decided to resist his ouster. And we're talking of like 100+ members of the ruling party. So, if you look at the math, it might be a bit tricky.
Yeah, it sounds like it sets us up for a bit of a power struggle here. So it might take a while for this to kind of sort itself out. How is the world viewing South Korea after this? Because clearly this declaration of martial law stunned everyone.
Oh, for sure. I mean, like it's gripping everyone, even outside of Asia. I think I think the worldview of Korea will not, change substantially because of one man's power grab, and especially if it's resolved fairly quickly. I mean, like the Korean economy remains robust.
Thank you so much. I have to leave it there. Clarissa Bettino joining us from Washington, D.C. on the latest in Korea. Welcome to Bloomberg Markets. I'm Scarlett Fu. We're midday here in the U.S. and just a quick check on equity markets. You have stocks getting a lift here with the S&P 500 up 0.4% at another record high. Of course, everyone is on tenterhooks waiting for Jay Powell to speak at about 1:40 p.m. Eastern time. Big tech is leading the way thanks to some encouraging earnings from Salesforce.com as well as Marvell Technology. The two-year yield coming down about 5 basis points to 4.12% on the back of some weaker ISM services numbers. And the euro, after fluctuating this morning, currently higher by 0.3% as the world awaits France's no confidence vote that is scheduled to take place shortly. Let's dive further into what's going on in France, because the debate before that no confidence vote takes place votes, plural, takes place is currently happening right now on the floor of the National Assembly. And it is expected that the vote result will lead to the demise of the current government led by Michel Barnier. Let's bring in now Bloomberg's Caroline Conan, who is live at the French National Assembly. Caroline, we talk about how this is the fall of Michel Barnier's government, but Emmanuel Macron is kind of behind the scenes here because he was the one who called the snap election and appointed Michel Barnier as prime minister. He has been in Saudi Arabia and is now making his way back. What has been his role in all of this?
I mean, he's, as you said, the one who called the snap elections on June 9 after he lost the European elections. So since then, the political uncertainty in France has been going on. I mean, there's been no relief on the bond market. There hasn't been much relief on the equities market either since the snap elections in July. Then it took 2 months to name Michel Barnier as prime minister. And now, 3 months later, he might actually become the shortest lived prime minister of the French Republic since 1958. As we speak, we're still about at least 1 or 1.5 hours from a final vote. There's still some debate. We're still waiting to hear, for example, from the former Prime Minister Gabriel Attal, who hasn't spoken yet. But interestingly, Gabriel Attal was actually calling for a sort of pact of non-aggression after all this. So once the Barnier government falls, what's next? If there is a new Prime Minister, can we actually sit down together and get some sort of a pact of stability in order to avoid another vote of no confidence against the next Prime Minister?
Okay, so more speakers still to come, including the former prime minister, as you mentioned. I want to go back to Macron for a moment here because he has called on French lawmakers not to topple Barnier's government. Does Macron have any real sway or influence over any of the lawmakers at this point?
At this point, I don't think he does. And in fact, he's on a plane from Saudi Arabia as we speak. He's supposed to land back in Paris in about 1 hour's time. Kind of at the same time, we should get the result of this no confidence vote. He did say before taking off, when he was still in Saudi, that an alliance of the extremes, an alliance of the far right and the far left, voting together to topple this government would be an act of unbearable cynicism. So he definitely bears a lot of responsibility in the political chaos that we've seen here unfolding over the past few days. And he's going to have to act very quickly in order to reassure everyone, to reassure the markets, to reassure the French also. Just a few weeks before Christmas, we still don't have a budget for 2025. And hopefully he will name a prime minister quicker than last time. Last time it took him 2 months to choose Michel Barnier. Now some say he could actually name a replacement within the next 24 hours.
All right, Caroline, thank you so much for the latest update there. Caroline Conan is live in front of the French National Assembly in Paris. And of course, we will be checking in with her throughout the evening for her and afternoon for us. Now, for more on the fallout from these events taking place in France, I want to welcome Marie Jourdain. She is a non-resident senior fellow at the Atlantic Council's Europe Center. Marie, thank you for joining us. Is this more of a political crisis or a financial crisis for France?
You asked a really good question. It is both for me a political, financial, and budgetary crisis right now that France is going through. Political, because this is really, the situation right now is really the result, as your journalist was explaining a few minutes ago, of the elections that happened last July, meaning we had 3 blocks within the National Assembly. None of them have the absolute majority, so it means they have to compromise. And none of them are succeeding in doing so. So from this political situation, which really brings a lot of instability and the inability to really pass legislation, come the issue of the budget law, which is really critical for France, especially in the crisis we're going through with a lot of deficits right now, way higher than it was expected to be. And from then we have a financial crisis looming, really, because for now the markets are pretty stable for France, but the issue for France is really to borrow money, and the interest rate is going very high, like comparable to the one of Greece, while it was very close to the one of Germany even a few months ago.
Right. No, that is a very good point. And Michel Barnier has actually been repeatedly warning of a financial and economic storm if his government is dismissed. My question is, does that argument resonate with French voters who might then pressure their legislators?
So this is really what the current government and representatives are really pushing, really saying to calling for the deputies, what we call them, the representatives, to be responsible in avoiding this crisis. At the same time, what we can see when we look at the polls is that the French are actually very distrusting right now the institutions, especially the president, especially the National Assembly, the one who've been elected. And so really, it is not really working right now, this line of argument, because, for instance, the National Rally, so the far right, who always wants to appear responsible, ready to govern, because never the far right has governed right now in France under the Fifth Republic. But even with that, they actually ready to take the risk of this political crisis for different reasons, really. They vote together, but they do not have the same objective.
Right. So, and I'm glad you bring up the far right here, because Marine Le Pen, she's a principal figure here, and it seems like she is someone who has a lot of leverage right now, but her fate is not actually secure at all. Her trial on alleged embezzlement is not over. There's a decision due out March, and she may not be allowed to run for the presidential election in 2027. So who would you be watching for as these debates continue and as the votes are to be held later on this afternoon?
Exactly. So basically, Marine Le Pen's strategy has been evolving since the possibility that she will potentially not be able to be candidate in 2027. And even if it's not officially said, more and more far-right officials are pushing for resignation of Emmanuel Macron, which is, by the way, very unlikely. And so what to look at is really who is going to be the next prime minister, because Macron has a number of names. The possibility is that he picks a name who might content really even more the far right, ready to compromise more on tax with the far right and really closing the door to any cooperation with the left. Or it could actually make the bet of going more on the left and to try to reach consensus with them. I think, though, this scenario is way more unlikely, but it could play on the current divisions on the left. We're looking a lot on the far right, but the left is still the first political force at the National Assembly, even though, because it's a coalition of parties, they are divided. And so there could be, if the political crisis keep going, more and more divisions within the left, and Macron could play on that to basically try to have kind of a coalition kind of with some of the left eventually, even though this is not the likeliest scenario.
Well, we'll have to see. He'll really need to put his political skills to the test. Marie Jourdain, thank you so much. Non-resident senior fellow at the Atlantic Council's Europe Center. And as you were just seeing, the debate continues in the National Assembly there in Paris. To follow every moment of the news out of Paris, be sure to check out the T-Live blog on the Bloomberg terminal. It's TLIV Go on your terminal. Coming up, the S&P 500 holding near session highs right now, giving back some of those gains at the moment, but still, we are in the green here before Jay Powell makes his comments in about an hour's time. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It's time now for the stock of the hour, or stocks really, because we're looking at big tech leading the gains, with the Mag 7 up about 0.9% as we count you down to Fed Chair Jay Powell's comments in just about an hour's time. Marvell and Salesforce both gaining at least 8% on the back of solid earnings. It is still earnings season after all. For more on U.S. equities, I want to welcome Megan Horneman. She is Chief Investment Officer at Verdence Capital Advisors. Megan, To see big tech in the lead again is so interesting, given that after the election, we've seen small caps outperform. There was this shift to cyclical sectors, the ignored parts of the market that people had kind of put aside because they were counting on big tech to lead the way. Is that rotation into small caps and cyclicals over now?
I think it's on hold for right now. And what you can see is we're getting back to some of that sectors of the U.S. equity market that people consider defensive, and that is technology. Technology has a good, earnings growth trajectory. It's just what price are you willing to pay for it? And you're seeing some of these other sectors lag, especially some of the ones that are economically sensitive. So that could be things like energy. We're seeing that lag big today. So I think we are seeing some of that rotation pause for the time being, because we are looking at economic growth that is okay, but we're starting to see some weakness. This morning, we saw the services report that came in lower than expected, even lower than the lowest analyst expectation on the street. So we are looking at some of the economic data that's starting to show some signs of cracking here.
Yeah, the 56.1 read in the or I should say the 52.1 read in the ISM services versus the expected 55.7, certainly a big drop off there. So how does this set us up, Megan, for the comments out of Fed Chair Jay Powell, which is due out in about an hour's time? We know that he's going to say he's data dependent. We also know he's going to resist commenting on what fiscal policy looks like in 2025, but he'll need to say something.
Yeah, I don't know that he's going to say a lot that's going to really surprise the markets. And that's because, again, they meet here in a couple weeks. I think what he's going to do is reiterate a lot of the same things that he said in the last time that he spoke. I think that he has to address that inflation progress is kind of stalling as well. I mean, you can look again today on that ISM services prices paid component that still remains very elevated. And that's one of the sticky parts of the market that Powell has talked about, that he's concerned, services, housing, wages. These are things that really are stuck, and he can't do much about that. Stocks, though, I think are going to take their cue today if he does speak and does anything to the bond market. Yields are lower today after that ISM services report, so you tend to see some of those, interest rate sensitive sectors in the market do well, or those high PE sectors do well. But if he does anything that shifts that from the fixed income side of the market today, we could see some of this rally lose some of its euphoria here.
I want to pick up on something you mentioned earlier, that rhetorical question of what price are you willing to pay for big tech? I guess you could apply that to the U.S. equity market at large, because it's had such a banner year, certainly in contrast to other global markets. And given the headlines we're seeing out of, say, France or South Korea, all it does is kind of reinforce that when it comes to safe investments, the U.S. seems to come out on top consistently.
Yeah, but at the same time, I think it's priced in that perfection. So when you look at valuations, and just take the S&P 500, for example, when you look at that elevated valuation, that's pricing in a perfect scenario, leaving very little room for error. But when you look at international markets, specifically the developed international, it's pricing in that downside. So when you look at what is the price you're willing to pay, is what is priced in at these levels. What's priced in at these levels is a perfect landing for the U.S. economy, a Fed that will keep cutting interest rates with no concern that inflation will reignite, and then completely disregarding the fiscal situation here in the U.S., taking away any political uncertainty. This is something that the market here in the U.S. is pricing this perfect environment over the next 12 months. But when you look internationally, with valuations historically cheap compared to the U.S., that could be pricing in a lot of that downside. So focus long term. If the valuation's more attractive, that's where you want to start to add some money.
So given all of that, Megan, where should investors who perhaps need to allocate for 2025 be looking? What would you be recommending?
Within the U.S., we still would be defensive in the value side over the growth. And that's because its value from a valuation is more relatively attractive compared to the U.S. Growth side of the market. We are looking at some opportunities in small and mid-cap stocks. But again, they're still trading, pretty high here, and they're very economically sensitive. So we are looking not only, be a little bit more of a value tilt in the U.S., look at the developed international markets. That's an area long term. If you can withstand this volatility, those valuations should revert back, and you should see that the developed internationals can do well over the long run.
All right, so don't get fooled by these short-term gyrations or short-term headlines. Megan Horneman, really appreciate you joining us today. I know you've been super patient and flexible with us, so with all the breaking news out of France, out of Korea, thank you so much. Megan is CIO at Verdence Capital Advisors. Coming up, we want to turn to the U.S. real estate market and take a look at how technology like AI will affect the industry. Liz Hart, president of Leasing for North America at Newmark, will be joining us next. This is Bloomberg. All right, we have some breaking news that just crossed the Bloomberg terminal. It looks like President-elect Donald Trump has chosen Paul Atkins as chair of the Securities and Exchange Commission. This is according to a post on Truth Social. And Paul Atkins is a former commissioner of the SEC. He was not the chair, but he served as a commissioner from 2002 to 2008. We know that the current SEC chair, Gary Gensler, plans to step down on January 20th, which is the inauguration day. In the meantime, I want to switch gears here and take a look at the U.S. real estate industry because it's on a mission to redefine itself in 2025, according to our next guest. Bloomberg's Abigail Doolittle has a special guest joining her. Abigail, take it away.
Thanks so much, Scarlett. And joining me today is Liz Hart, president of Leasing for North America for Newmark. And Newmark, of course, is in a multitude of businesses in the commercial real estate space. Your wheelhouse, leasing, but of course also advisory, building management, capital markets, Bloomberg, our viewers, we love capital markets. So in terms of the, let's call it $1.5 trillion worth of debt coming due in CMBS, there was a lot of speculation a year ago that it was going to create a complete collapse. Is that still on the table?
I think what we're really seeing is that there is a portion of the commercial real estate market that will have debt issues coming up. But because demand is coming back in those key urban markets at such a fast pace at pre-pandemic levels, there's also the opportunity for amazing amounts of value creation that we're seeing at the same time. 24 months ago, it was very hard to find a way to get through this. Now that there's more data points, we're able to move forward.
So, it's interesting because, of course, you're a publicly traded company. Your stock, not quite at the record highs, but about 200% off the low. So it really supports this. Does this mean investors see a bottom?
I do think investors see a bottom, but also Newmark has been investing in top talent through the downturn. And as it comes back, those people are the ones who are really creating the value in the assets and driving the real estate market forward.
So relative to leasing, you're in a lot of different areas, including office. What are some of the big deals you're working on right now that might create some headlines?
Well, we won't talk about the deals we're working on, but what we can say are some of the deals that have been completed. And we've seen very large and significant transactions from AI companies. They're growing in San Francisco. They're also starting to grow in other markets. We also have growth in the financial services sector and the legal sector as well. So it's looking like a very strong 2025 for the leasing market.
And in about 20 seconds or so, Liz, are levels where you are leasing in markets that existed pre-pandemic, are you at pre-pandemic rates or are we still below and rates need to come back up?
At Trophy, it's higher. In the middle, it's climbing, but still below where we are. And in the bottom, there's a lot of work to be done.
So still a bit of a recovery is ahead. Well, thank you so much for joining us, Liz Hart, president of Leasing for North America of Newmark. We really appreciate your time.
Thanks for having me.
Scarlett?
All right, thank you so much, Abigail. I just want to recap the headlines that we broke a few minutes ago, which is President-elect Donald Trump has made a pick for chair of the SEC, the leading commissioner, the leading regulator, I should say, of the equities market and the publicly traded markets here in the U.S., and that is Paul Atkins. This is according to a post on Truth Social. I want to bring in Ben Bain, one of our reporters in Washington, D.C., who covers financial regulation. Ben, thanks for joining us on short notice. What do we know about Paul Atkins? My understanding is he did serve at the SEC before.
Yeah, that's right. So previously a commissioner at the SEC, very much a known quantity in Washington in financial regulation, financial policy circles. He's coming back to the agency if he's ultimately indeed formally nominated and then confirmed. Would be coming back from the private sector. I mean, I think just taking a step back for a second, it's important to think about what a Trump appointed chairman of the SEC is going to take on. Would be coming off of 4 years in which Chair Gary Gensler, who says he's going to step down on January 20th, has really tried to instill tougher rules on private equity firms, on hedge funds, transparency rules across the equity markets, a lot of things that the big financial firms have really rallied against and pushed back against. There's going to be a high expectation that Paul Atkins is going to lead an effort to deregulate and roll back many of the things that Chair Gensler has tried to put in place. The other area that a lot of people are going to be paying attention to is crypto. Certainly, Trump has had a very big embrace of crypto during his campaign. All signs are that this incoming administration is going to want to embrace crypto further once in power. So the SEC is going to be integral to that effort. Going back to Trump's first term, when Jay Clayton was leading the agency, the SEC took a hard line and essentially said that most crypto tokens are effectively unregistered securities that are trading and need to register with the SEC and are breaking American equity rules, essentially. So what we're seeing here now, and where the expectation is that a Paul Atkins-led SEC would significantly loosen those restrictions and perhaps come up with a whole new framework for regulating crypto.
Okay, really good information there. And given that he has been a commissioner for the SEC in the past and a known quantity, it seems like he's a safe pair of hands. Is there any reason to think that this might encounter any kind of resistance?
I mean, he's very well known in kind of financial policy circles, including on the Hill with lawmakers. There's nothing that suggests that he's going to run into some of the headwinds we've seen with other Trump picks thus far.
All right, Ben Bain, who covers financial regulation for us here at Bloomberg News in Washington, thank you so much. This is Bloomberg.